So finally, some good news of which we've been really looking for. We've been expecting this for a while. We have got the new chip plants coming to Arizona. The new AI chip plants are going to be at Taiwan Semiconductors, which has a huge, huge presence, a $60 billion plant. There's 8 plants being built there. They're going to build another 8 plants. It's going to go to another $100 billion. And they're going to be partnering with the United States. They've got the CHIP Act that wants to promote this, and we have got business going like crazy here in Phoenix, Arizona. And we've been talking about this for a while. We're going to talk a little further about this. It's not yet time to get your feet into the water, but it's coming soon. So let's just go through our timing models, and our economic models are all coming together exactly as we thought. We're going to make an absolute fortune, but we want to avoid losing any money. Remember, we have 2 rules. Rule number 1, we want to make money, but most important than any of the rules, number 2, we don't want to lose money. And right now we're in huge jeopardy. So commercial is being bought, but it's being bought at enormous discounts. So that hasn't happened. My marketplace is really affordable homes. We're very, very, very conservative. This is for mom, pa, pension funds, and people who can't afford to lose money. These are very, very conservative. That's where we're at, and our market is not there yet. Now, remember, if you like my videos, please subscribe and give me a thumbs up. Now, we talked about liquidity a couple of videos ago. That liquidity, we had a big pulse of liquidity in January of 2024. Imagine that, just an election year. And then in September of 2024, we got another pulse right before the election. We got a whole bunch of money put in, and it, of course, goes right into the stock market. It brings interest rates down, puts a lot of people to work. And of course, that pulse is over with now, and I don't see any liquidity pulses coming at all. Matter of fact, I think we're going to have liquidity is going to be rapidly withdrawn from the marketplace, which goes right in line with our timing model and right in line with our thoughts as to how we're going to do this. But don't buy any real estate right now. Don't buy any residential. Don't do it. So let's just go and let me open up this slide a little bit so you can see what I'm talking about here. And I'm going to go over and use our cursor so that we can talk about this. Now, again, I just got this a couple days ago from Zero Hedge, and it's showing that we have one of the largest drops from Atlanta Fed Nowcast. So just a week or so ago, they were talking about breaking below zero. But now we're down at a negative 2.85% for the US GDP. It's the largest drop since we had COVID. So this goes right in line with where we think we're going. And if you remember, we have pending home sales that look very, very similar to this. So the pending home sales are at historic lows again. And now we're seeing the economy dropping and matching our pending home sales. So this goes right in line with the fact that we've had a recession call. Once all that, remember we had these huge liquidity, and we also had a $1.79 trillion Inflation Reduction Act, and that just put enormous money and lending capability into the marketplace for lenders. And of course, the lenders do that; they make their money by lending. So just look at this again. Let me open this up again, and so that you can see this. And let me go over to my cursor. We are way down here, and look at it's dropping, and this is just beginning. So we are going to have a pretty severe recession looking right at us. I've been calling it for a while, getting everybody prepared, because those are prepared. We are going to make an absolute fortune on this. We are just going to make a lot of money. Not yet. So I don't want you to start buying yet. I'm getting calls virtually every day. If you want to get involved with us, we have a group of investors that we're doing business with. So please call us. There is an onboarding that we need to talk to. We make sure that you're a good fit for us and I'm a good fit for you. We're going to spend a couple hours together. It's going to cost you $200 or $300 to take a look at your portfolio, see where you're at and what you're going to do. And we're going to get you ready and see if there's holes in your portfolio that need to be filled. We can do that because you are going to have a buying opportunity that only comes 3 times in your life. It is coming, and it's coming quickly, and we want to get ready for that. So let me just open this up a little bit so you can see this. Let me go to my next slide here, and let's just take a look. Now, here's the negative. And we're talking about why are we going to have properties for sale? Well, this came out in the Wall Street Journal just a couple of weeks ago in February 2025. And it's talking about the Biden Mortgage Relief Act. So people who should not be buying these properties are buying properties. You know, typically we look at a FHA, we're looking at a, debt to income ratio somewhere around, 40 some percent, 43%. And every once in a while they can raise this up over 43%. And now we've got to the point where we're at 63% of all loans are over debt to income ratio of 43%. Well, 43%. That means that, and that's gross. So that means that 43% is the cutoff, and we're at 63% of them are over that. These are where you have all the problems. This is where we have problems with properties, and this is what's fueling this. So we're already hearing from lenders that they're ramping up their short sale departments. We're hearing that on the industry that they're ramping up. Do you understand what that means? That means that the lenders know, based on what's in their portfolios, that a lot of these are going to go to short sale, which means that all of the equity, that ghost equity, is gone. Now, we talked to a lot of our clients, a lot of people, and we're finding out that a lot of people got this huge equity run-ups and went out and spent it. They bought motorhomes, they bought lifetime vacations and just style. They bought furniture and all kinds of new cars. And the equity's gone. And when prices start to contract, they are contracting here. I want to tell you that prices are contracting here in Phoenix in the affordable homes. Those are the ones that are most affected by the rising interest rates. And of course, they're the ones that are most affected by any type of employment slowdown. And we're starting to see employment slow down as well. Now, here in Scottsdale, Arizona is just doing really, really well. There are two different markets, completely different. I mean, they're like night and day. People in Scottsdale don't care what the interest rates are because a lot of them are paying cash. And these are people who are making $400,000, $500,000, $600,000, and they're buying a $2 million home. It's peanuts for them, easy peasy. But the meat and potatoes, the people who are workers, the average Main Street Americans are buying from like the 275 to 4.25 price range. And that's a very, very difficult one. That's where we're having trouble with pending home sales. Those are just falling off a cliff and prices are coming down. We talked about that in our last video with John Rubino. And I would suggest you take a look at that. It was a great video. John, of course, is a very, very smart guy, and he has a great understanding for it. But let's look at this one more. Is that already we're looking at delinquencies, 90 days, serious delinquencies. So we're hearing that we're over 12 to 15% of delinquencies. That means like 30 days to 90 days. But once you go 90 days, we're down to 7.05% already. And at the peak of the great financial crisis, we were at 7.02. So we haven't even started yet. And already we are over what we experienced at the maximum in the great financial crisis. And I was here. So all these properties, all these borrowers that exceeded the debt to income ratio of 43%, they are at risk if the economy falters or stutters at all. These people are going to have problems. And already we're getting lenders looking to do short sales. So this is coming. Let me go to my next slide, and let's just talk about some good things that are coming so we're not terrible. Now, this is going right by our timing model. This is stylized, of course. It has been focused in the commercial space. You're hearing all of the crazy things about the fact that, if you watch Ken McElroy, you're going to see that he's been buying properties below cost, like $20,000 per unit below cost. So that's the type of stuff that you want. It's been focused in the commercial space. We're hearing things that buildings are being sold for the land value only. Now, this was great fun. This is setting comps. Every time one is sold, it's sold for more money and it goes up and up, and we exploded. But we came here and now we're rolling over, and I expect this. That's called the waterfall. That's coming down like crazy. So this is a huge, huge jeopardy position. Please, please be very careful here. Now, if you're a professional, I would say to you that you do not have the wind at your back like you did over here. You bought something for $10,000, it was worth $11,000, a month later. This is where you buy something for $10,000, it's worth $9,000 a month later. So you need to be a little careful over here. But this is going to come all the way down, which is going to be just slightly below Q2 of 2020. I'm anticipating we're going to 2018, 2019 prices, but it could come all the way down. This is an historic bubble, and they never stop where you think they're going to stop. Now, what is this going to do for us? Well, look here in Arizona. You can go do this Wall Street Journal documentary. Just say, it's why a 17-mile stretch of Arizona is booming. Look, we're right next to California. Businesses are leaving California in droves. We have the 303, which is the truck route. This is a truck route right to California and the Inland Empire. And you cannot, we have 17 warehouses that are under construction right now with over 1 million square feet. You cannot get a pad over here. We've got Wolf Sub-Zero just opened up a facility here that they're another factory. And again, Phoenix has changed. Phoenix is no longer a construction town like we were in 2008, when we were just building. That's what we did. Phoenix built just like very similar to like what's going on in Austin, Texas, and Dallas and Houston and Fort Myers, Florida, and lots of places along the coast in Florida. They were building. That was the main industry was building. And when that stops, all the construction workers leave, and it just implodes the economy. That's not what's going on here. We have become the #1 manufacturing startups in the United States, are right here, right along this 303, and in Phoenix, Arizona. Phoenix is also becoming we're close to California and close to Silicon Valley. It's 30% cheaper to start up here in Phoenix, Arizona, as it is in California. And we're just as smart here. They understand it's just as well, but you can save 70%. So that's happening here. Phoenix, Arizona is the #1 market in the world. It is absolutely outstanding, but we're not going to be immune. So please don't start buying. We have a timing model that's telling us when to buy and when not to buy. And right now, that model is telling us don't buy. So let me go over to my next slide, and let's just talk about what else is going on here. Now look at this is really big news. So U.S. seeks to boost semiconductor chip. This was in Martin Armstrong. Amcor has opened up, has announced that they're building a $2 billion chip plant here in Phoenix to power Apple products. Apple, of course, is onshoring, coming to the U.S. We had a New York firm just buy 2,000 acres near the TMC plant. It was an absolute bedlam. And again, of course, we're talking about the #1 in the nation for manufacturing growth at 11.45% increase, 6.5 million square feet of space. And look we have got Halo Vista, a city within a city that is surrounding the Taiwan semiconductor plant in Phoenix. This is it here. We're going to have 500,000 square feet of retail, 12 million square feet of industrial. This is coming here. It's already planned. They've already got the manufacturer. And TSMC is going to get even bigger. And right now we're estimating 62,000 jobs. Now, these aren't warehouse jobs. These are electronic jobs. These are really high-paying jobs. 62,000 of them are coming here, and they're going to be here within the next, 24 to 30 months. So we're really excited about this. So TMC started out as a 12 billion facility, went to 40, went to 50. Now it's going to be another 100 on top of this. It's going to be a $150 billion firm. They're going to build 16 chip plants, employing just tens of thousands of people are coming here. So again, we just got prime housing. This is October 17th, 2024. We've got bidding wars for property over that way. And we have 4,000 acres in Surprise. From the BNSF Railroad, they are going to bring in rail and freight for intermodal warehousing and distribution center. Going to employ thousands and thousands of people. And we just opened up the South 202 and completed a loop. Now, you know that business follows where the freeways open up. Now we identified in my business, we've identified long time ago where the growth corridors are. We have buy boxes, we have growth corridors. So if you're looking to do business with us, we're going to talk about getting your cap rates, because we think cap rates are going to go up, which means it's going to compress prices down, because we have competing. I mean, if you can get a 4.5% or 5% risk-free from a treasury, why would you get a 4.5% cap rate from anything else? So that means that caps are coming down. We're looking for that. We're anticipating that. We're going to do a cap rate for your building to make sure that it does our values, and we're going to do valuations for you. So this is a whole process. This is not just we just take you out and find you a property and sell it to you. This is a plan, how we're going to do, how it's going to replace it in your portfolio, what this is going to do for you long term. Do you have any events in your life? Kids going to school, weddings, children going off to college that you need some money. So we want to know you and get to know what your goals are. Are you going to retire? How much income do you need? So we want to talk with you and see that we have an opportunity coming. It's not here yet. But it's coming, and we are going to make a fortune. It's going to be scary as all get out. I'm telling you that right now. You are not going to be excited about doing this. That's where my job comes in. We've been on a moratorium since mid-2022, and now I'm telling you that things are looking up, and we are going to start making some money. We also have this area here. Now, I'm giving away some of our free research, but this is being opened up, and all this then becomes prime land for development. Now, I'm going to tell you, you can reach me here. I'd like to talk to you. Let's find out if we're a good match for you, for a good fit for you. I've been doing this for a long time. I have groups of people that really know what we're doing. I've been doing this for 40 years. I have a personal portfolio. I'm a fiduciary. I don't need to sell you a property for me to do well. I have lots of properties that I own. My portfolio is free and clear, and I'm doing pretty well. So we want to bring that to you so that you can do that as well. Most of our clients are doing $15,000 a month, every month, in free cash flow for themselves. Now, I'm telling you, I'm doing seminars here in Phoenix. We've got one next month as well. The goal at the seminars for when investors come in is we want you to accumulate $5 million in residential rental properties in the next 5 years. And we want you to focus on cash flow, $15,000 a month plus within 5 years. Now, I think we can do that. We're excited to do that. If this is something that you're interested in, give me a call. We'll set up an appointment. We'll do a video chat, and we can see if we're good for each other. Remember, first 15 minutes are free. I have no trouble with that. You can call me, ask me any kind of questions that you want. We've got these crazy regulations from the NAR that we have to respect. So I do charge you. It's not very much. It's $200-300 for a couple hours. You should, everybody's very happy with it. If you find out that, hey, this guy, I don't like him, I can't stand him, he's stupid, we're not going to be able to do this work together, we won't charge it. We'll just go our happy ways and say, well, okay, this didn't work out. So, but you're going to like this a lot, and you're going to want to get your friends involved. So we have seminars in Phoenix end of this month. We're going to talk about the economy, how we're going to make a fortune on this, because we are. My timing models are starting to turn green, and we're looking at buy points coming to us. So if I can help you in any way, where my numbers are at, give me a call. My best to you. Bye-bye now.